Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, I left you off with that weekend webinar video, and I showed you a lot of charts with head and shoulders formations, and that we were beginning to really break down out of them, and that the leader of those indices, the Dow Jones Transportation Average, had a massive shoulder in ahead and didn't really have the right shoulder in yet. Well, that right shoulder is beginning to form now, and as you can see, we have been dropping ever since, we started getting into that shoulder area in the S&P, the NASDAQ, the Dow Jones, and I kid you not, I think we got a long way to go on this downside based on the technical analysis I'm looking at. Now, traders, any market that's really bearish and heading down can rally and have little rallies on its way down. But I kid you not, when I tell you don't fall in love with the upside here, do not fall in love with the upside. If a rally comes, you can probably sell it. If you got lucky, you get a one-day rally at some point in the next 3-4 days. But it's really difficult to find more than a couple-hour rally over the last 2-3 weeks. As you've seen, if the S&P rallies even a little bit, sellers come out of the woodwork. Now, you got to expect, of course, the fundamentals are always coming out in the charts, but you're going to have to expect more bad news to come our way. If everyone starts to relax a little and Freddie and Fannie are all fixed up now, and you got IndyMac taken care of, well, you know what? Other banks are going to start to show their true colors in their books, and likely more downside will come our way based on that alone. Now, I've mentioned to you in other videos that we likely will see a credit card debacle start to happen, because a lot of the traders that were using their home equity to borrow money and use that to better their lives or just get through their daily lives can't get home equity loans anymore. Their equity isn't there. As you know, the real estate market's really come off a lot, and they started using credit cards. Now the defaults on those credit cards are beginning to build. That is a whole nother shoe that's going to drop. And when that shoe drops, we go down even further. Now, the technical picture is not pretty, traders. I kid you not. I've been looking at these charts and going, oh my goodness, are we in trouble here? And I think we're in some trouble here. So I want to show you some charts now. I got some dailies and some weeklies that will continue on from where we left off with the last video that I did for you. And I want you to see where we are now and where it looks like we're going. So with no further ado, traders, let's go to the charts. Okay, traders, the first chart you are looking at is the S&P daily bar. This is the cash S&P daily bar chart. And as you can see, we obviously have the head and shoulders formation right here. And we began to break down out of it. And on a daily basis, formations are from much lower than where we are today. We're trading around 1216 currently. I think we're going under 1200. The charts tell me we're going under 1200. We are below the Omni's proprietary trading average for quite some time now. And now we are out of the right shoulder of the head and shoulders formations. And kid you not, projections are for much lower. This is a daily look, a daily bar chart. Each green bar represents 1 day's trading. I want you to look at some weeklies now, because the weeklies are really telling a story here. They're showing you a picture, and the picture does not look good. So let's take a look at some weeklies now. Okay, traders, this chart that you're looking at is the S&P weekly bar chart. Each one of these green lines now represents a week's worth of trading. And for a while now, I've showed this to you in the past in other videos. This is the Omni's proprietary average right here. And look at the respect that the market has paid to this average through the entire bull move, and then even in the bear part of this move. Watch. Right here, the market comes near the average and gets repelled towards the upside. Again, the market comes near the average and runs back towards the upside. Another time, runs back towards the upside. Here, you didn't even get close and it ran back towards the upside. You come back, you touch it again, back to the upside. You come down, you hit it again, you run to the upside. You hit it again, and it breaks and goes all the way down to the 200 bar moving average. rallies back up to the exact point of the Omni proprietary average and has been breaking down ever since. And now look, we are well below the 200 and on our way down. That's a weekly chart, traders. Forget about a daily. Weeklies are way more important than dailies for showing direction, and that direction is absolutely lower. That's the S&P daily and weekly. We're also going to take a look at a couple of other daily and weekly charts, the Dow and the Dow Jones Transportation Average. So pay attention because there's a lot to show you here. Again, below the 200 bar average decisively right now, way below. Let's look at a couple of more charts. Okay, traders, the next chart you are looking at is the Dow Jones Industrial Average daily bar chart. Again, head and shoulders formation, clearly defined left shoulder. This would be the head, this would be the right shoulder, and now we are beginning to break down from that formation. We are heading down, and I kid you not, on this chart as well, it does not look good. Head and shoulders formations, when they look like this, are quite bearish. There are other types of head and shoulder formations, and they look like this. That would be considered an inverted head and shoulders, and that's a bullish signal. But this one is the opposite. This is absolutely bearish. I have been showing you video after video, getting you prepared for the downside, knowing it was coming based on the formation. Well, traders, here it comes, so you better get ready. You better make sure that you're not trying to buy this, and always put your stops in, because this market is getting extremely volatile lately. Okay, traders, you just seen the Dow Jones Industrial Daily Bar. Now we're going to take a look at the weekly bar chart. Pay attention to this because, wow, it looks ugly on the downside. Okay. We've been riding above the Omni's proprietary average for a long time in the Dow Jones Industrial Average weekly chart. Well, when we finally did get below it, we've stayed below it. We tried to test and get above it. It would not get above it, and then it started to break down. Well, now we are below the 200 bar, and we are a lot below it. And believe it or not, if you follow this 200 bar average, we haven't gotten below that average in years. I'm talking years. We have not been below this average in this weekly chart. So this is a heads up warning to you that even if we rally, we will probably stop at the 200 bar average right up here somewhere around 11.6, 11.650, and then fail and go down for deeper lows, traders. Again, we have not been below the 200 bar average on a weekly in years. This is below, and it doesn't look like it's getting above anytime soon. I think you're going to get the same action off this average that you've seen on this average. So make sure you do your homework, traders. Take a look at your charts. That is some serious work to be done on the downside based on the technical analysis we're looking at here. Let's look at one more series of charts. Okay, traders, the next chart you are looking at is the leader of the indices. According to Dow theory, according to my analysis, and according to watching markets, you can tell that for yourself. This is the Dow Jones Transportation Average Daily Bar. And another market with a head and shoulders formation. As you can see, you have the left shoulder, you have the head defined completely, and you are just now beginning to get into this right shoulder right here, traders. We have to fill that shoulder in. We have to get to the bottom of the shoulder, and then the downside begins. So this is no joke here. We have some trouble in our economy. It is coming out in the analysis, as it always does. Fundamentals always seem to come out first in the charts. This blue line right here represents the 200 bar average. It is a very widely respected average. It is watched by most of the analysts who do trade stocks and who do trade commodity markets. Even clearing firms pay attention to the 200 bar. They've seen us get under it. We're under it now, and it looks like we have a whole shoulder to fill in and then a big projection on the downside. I don't know that that will happen for sure because nobody can know what's going to happen for sure. But based on fundamentals coming out in the charts, this looks like it will absolutely fill in and then give us a drop. Now that's on the daily bar. Let's go look at the weekly bar of the transportation average and see what you think about that. Okay, traders, once again, you are looking at a weekly bar chart. Each green line represents a week's worth of trading. We are now below the Omni's proprietary average, and as you can see, for a long time the market respected that average. Then it got below it and started to move around violently, got itself above it and put in a double top, and we have been dropping since that double top. Now we are below that average and heading towards the 200 bar. We take the 200 bar out on the weekly, and that projection on the head and shoulders I just showed you in the last chart will very likely happen. Again, nobody knows for certain if this is going to happen, but the analysis I've been doing for many, many years tells me it is very likely that we are heading towards the downside in the indice markets. Please do your own homework. Pull up your charts, look at dailies and weeklies, and tell me if you don't see some of the same formations and the same directional look that I'm looking at right here in these charts. So, you've seen the charts, traders? I tell you what, do your own homework and tell me if you don't see that same picture. The picture is not rosy. So again, I will tell you, don't fall in love with the upside here. There is going to be blood in the streets, like the blood on my face. I don't know if you can see it, but I cut myself shaving here. A little bit of blood. I think there's going to be blood in the streets come the next couple of weeks and months ahead in the S&P market. So be careful out there, traders. All right, now, for Wednesday, 7/16/08, we got a red Omni again, traders. Another red Omni. It just keeps coming out towards the downside. If you look at your analysis, you know you have to agree. If you're a good analyst, you got to agree with more downside because that's what all the indicators are showing. That's what the chart is pointing towards. The bad news is out. How are we going to go up? So don't get caught trying to buy those rallies. Sell into them when we get them. All right, traders, for tomorrow, Wednesday, the S&P E-mini, the ESU8. Omni says to sell in the mid to high 1220s. Trading about 12.16 now, so get your orders in. Omni's profit objective on this trade, we're expecting a drop below the 1200 mark, down even further, lower than that. I will give you that exact projection at my site tomorrow, so make sure that you come to the site. It's www.livewithoscar.com. Get yourselves into the chat rooms where we can help you learn the analysis. And I'll tell you what the downside projection is, because as the market data begins to accumulate, I can give you a better projection. Hopefully we'll be a little closer to where it will stop on the downside tomorrow and give us a chance to get out. And of course, traders, that's only based on if it goes down, because I don't have a crystal ball, and I know you don't have a crystal ball, but the analysis is a roadmap to where markets are likely going next. So do your homework and make the analysis your crystal ball. All right, traders, make sure that you get yourselves out before the market closes tomorrow and place your stops first. Find a sensible place where you would place a stop if you did sell it in the mid to high 1220s. Put a stop in that you can live with, but remember this, volatility is getting extremely pumped up lately. Market movement is all over the place. And if you put a little baby stop in, that little baby stop is going to get hit. So don't trade with small stops, but make sure your stops are sensible. All right, traders, there's a lot for you to watch in these charts. We also have a corn trade, traders. We got a corn recommendation on the site for tomorrow. You Omniacs that come to the chat rooms, I will give you that recommendation. Otherwise, go to the Omni page and you'll see it there now. So go to my site, click Daily Omni, and check out the corn recommendation. All right, traders, I don't really feel like getting into too much more in this video tonight. It's kind of late, and I did a lot of work earlier, and I want to get my butt back out there and see where these markets are. So don't forget, do your homework, come to the site. Don't trade alone, traders. Never trade alone. I have a friend here right now. He is a member from our site. He's been with my site for how long now, George?
8 months, 10
months. 8 months, 10 months? 8 to 10 months. G-Trade is his name on the site, and he's been with us. And what do you think about Don't Trade Alone, George?
Absolutely. But You can't do it any better than this. This is the place to be if you want to trade.
You like trading with us?
Absolutely.
It's great to have that crowd around you in that chat room, isn't it? You get ideas from them, you give them ideas, but as a group, as a whole, it's so much better to have that strength in numbers and strength in unity and people who are there to help you get through these rough and tumble days. So that's why I tell you, don't trade alone. Make sure you come down to our site and join us. George, would you like to come up here and say hello? Come on up, Judge. Yeah, all right. This is G Trader from our site. Been a member for a long time. He is a great guy. He gives us all the news. When news is coming out, George puts it in the room. I'll tell you that much. He puts it in like that. George, anything you want to say to the Omniacs who watch us?
I'm speechless. I didn't know I was going to be in the show. So,
George, you do a great job at the site. We really appreciate you being in the rooms every day. George came all the way from the East Coast. He is here in Vegas with us now, spending the next few days. So, George, thank you so much for showing up, man.
thank you, guys.
Thank you. So, all right, George, we'll keep doing our homework together every night. We'll work together during the day, and we'll see if we can't make you a better and better trader.
Awesome. Thank you.
All right, man. Thanks for coming. All right. All right, traders, don't forget, I want you to do one thing that I say to do every day, every morning, every afternoon, every evening, especially when you're placing orders. You got to keep your emotions out of trading, especially when you're placing orders. Once your orders are in, that's when the nervousness starts, right? You place your orders, and then the ticker starts, and you start going, oh my God, I'm going to get hit, my stop's going to get hit. Well, you know what? That won't happen if you just keep your emotions out. And once your stop is in, listen, you have a predetermined loss. If you're trading in the S&P Emini, it is a very thick market, lots of volume. If you place stops, it is not very likely that your stop is going to be run through. You'll be filled. That means if you're in a trade and you have a stop in, you can relax. You know what your loss is going to be. So once you put your stop in and you get into the market, don't get nervous. You know what's going to happen. You have a predetermined risk, a predetermined loss, and hopefully it'll turn into a profitable trade. So keep your emotions out of trading. One of the best ways I can help you with keeping your emotions out of trading is to tell you to say this every day, and you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.